Welcome everyone. I'm going to give you a quick trade snapshot of some of the recent action in the PairTrade Finder PRO top 30 pairs, and let's go quickly to our trading signal, see what's happened, let's say over the last week while this promo's been going on. We've had 4 exits, $17 loss on this one, and then 3 very nice wins over the last few days. And let's take a look. We've had 2,600 of profit. Let's take a look at this last one, which is Celanese versus VSM. Very quickly, let's dive into the pair charts on that trade. So that was a trade that was called here on the 20th of December 2018. So that was about just over a month ago. And we had a big spike up to 3.26 standard deviations above the mean. You see it here. I'm not going to go into the news analysis, so that's up to you guys. But what we will do is just very quickly see what these companies are. So one is Celanese, and that's got a market cap of 13 billion, a beta of 1.14. The other is VSM. It's got a market cap of 3.5 and a beta of 1.49. They are both in the basic materials segment and in the industry chemicals. So they're chemicals companies, and one manufactures and sells value-added chemicals, thermoplastic polymers, and specialty materials worldwide. And the other one manufactures, transports, and handles special materials for the semiconductor and display industries throughout the world where those are manufactured. Okay, so they're both based in the US. One's got 7,700 employees, the other 2,300. As I said, market cap and beta is not too far off. I'll let you guys go and figure out financially whether you see these as correlated. But they are in the same country, both in New York Stock Exchange, pretty close, 3-to-1 ratio. They're in the same sector, they're in the same industry, and they're not too far off on financials. So we would say that's our basic fundamental screening. Now, what happened? Let's go to the pair charts again. So you had the signal, 3.26. We won't do the news analysis because it's a quick video. But what you do see is it was a trade that very quickly came good. Now, would you have taken this trade? Well, first and foremost, you have a gently trending ratio line. So that might be the first warning where you say, I might not. Now, this is a 2-year analysis here. You also have a breakout of above the highs and the resistance of the ratio previously. So right there, that might be enough to say, I don't want this trade. However, you also see that even though you've got a gently trending ratio line, you have at least 2 examples of successful trades that broke below the ratio line and came back, and 3 examples of trades that worked very well despite this gently trending ratio. So up to you. You might reject it, but you might say, I'll have a go. Now, if you look down over here on the RSI chart, here's the entry. It is at an extreme, just above 70. But importantly, if you see all of these peaks, while this is trending upwards, this is trending, the peaks are all trending downwards. So we call that divergence. So this is sloping down while this is sloping up. That, generally speaking, means that there's a good chance that this ratio may turn around. And we call it divergence. So there is a divergence here. And that might have been enough for you to say, hey, look, that looks great. We also look at the volatility. We're at about 1.4, 1.5, very much in normal range, and you would have full position size this trade. And had you done this, where would you have ended up? Well, the trading signal, we just got the exit. That was 2 days ago on the 24th at the close. You had $1,035 of net profit on a $10,000 a leg trade, which would have taken $2,000 more or less of CFD margin. So you had a 50% return on margin in just over a month on Celanese versus VSM. So that's a very quick trade snapshot of one of the latest exits on PDF Pro Top 30 Trades of the Month. And I hope you like what you see. Happy trading, everyone.